Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday. And we're now at September 13th, 2021, 6:20 p.m. And I look out my window at my office now, and it's getting dark. 3 minutes a day, we're losing sunshine. So I'm going to have to change the clock soon. We're going to get that coming up right around the corner, and have to change all the lights outside. That's going to be a fascinating event every year. They say so simple. It isn't. I think you know what I'm talking about, and I'm really good at all that, but nothing simple. Well, let me tell you what's not going to be simple tomorrow. You're going to wake up, we're going to all be waiting for the CPI number. When we see what that number is, we'll see what the market reaction is. Does it cause an event or not is going to be the question. Be cautious with it. Are we going to see transitory inflation? Does it look like it's more baked in? How's the impact going to be on the gold, the dollar index, interest rates from it? If you've watched interest rates, they've gone to sleep at the 1.33 level in the 10-year note. But when you go to sleep's when they get you. So be careful there. On the energy markets, did you see how much that we're up now into nat gas? What's going on is we're now getting another tropical storm coming out of Mexico this time. It's named, and it could dump as much as 20 inches of rain. And where's it impacting? It's going to impact the platforms again in the Gulf of Mexico, the regions there. It's got a large swath of area. They're talking, I think Houston, I heard 10 inches of rain they're forecast, but some areas 20 inches of rain. 20 inches of rain. Can you imagine that much rain? Unbelievable in its scope. What's that going to do to the markets? Well, it hurts getting the oil production done. So everything's sort of stuck in. And of course, you can imagine the supply parts that got hurt. You got to get those. So they're still a ways off. We saw also in Nebraska, Grand Island, I think it was, the JBS factory had a fire yesterday for the meat packers there that watch the cattle. It sounded worse than it was. This afternoon, they came out and said, no, they'll be back in operation now, and it was not as serious as first thought. Nobody got hurt. It's all great news. Cattle fell rather sharply because who's going to buy it right there? Then you got to get them and transport them to another area where it can be cut. If there were large damage, there wasn't. So let's go to the charts. On the S&P 500 index, when I look at this chart, and I studied it during the week, and I'm going to myself over the weekend especially, there's nothing bearish on this. I know that September's typically a disappointing month in the financial markets. I expect that. So to drop more, why not? There's nothing wrong. October's often a very volatile month, and then you get into that November-December period where we talk the Santa Claus rally. I'm a little concerned this year with that Santa Claus rally because the supply chain. I keep hearing that if you're not going to go out and do your Christmas shopping now, you're not going to get the things you want to give as gifts. Be careful. They're warning you. I think they're right on that. I look at the logjam in all the ports. You got 40 vessels waiting to unload, and the traffic jams there and all the other nonsense. And what about coming out of China and everything to us? There's real problems here. Pay attention to that. So that jam gives the market a problem. 3M today came out and they made a statement that they're not getting the orders from the automotive manufacturers like they thought, which they think means that production's going to drop again, even worse. If that is the case, remember, everybody orders ahead of time to make sure that you have the products there. Be careful. That's why platinum and palladium, to a degree, are under some pressure here. But when I look at the market overall, this market's also about price earnings. It's about passing on prices, what it can do. It still looks overall good. Yes, the market made a trade top. Okay. Not a surprise. You got up here into the 45-40 level, and boom, you've come down 100 points. You can see how the market's got a pattern of lower highs, lower lows. The market is under the 18-day average. So what do we have? We have a downtrend. The bias is down. Resistance is at the 44.80 level. Let's call it 44.80.50. If the market gets over 1975, hitting 45.20, you break this pattern. Barring that, no, the bears are in control of the market right now. Potential target, if the market continues to break, 44.10.75. What about momentum? Still pointing down. Trend down, bias down, momentum down. All three. In the NASDAQ, you fell right back to the 18-day average and the market's trying to stick there. What do I mean by that? When you lose an embedded reading, and I teach this in my courses, and if you haven't taken that enhanced Bollinger Band course, go to our website. It's under education, and you can learn right there how to work with this. And when you lose that and you don't get it back right away, and I mean right away, often price is going to go to the 18-day average to try to figure out what to do next, and that's just what we've done. The trend is down, the bias is up since the market is staying over that number and momentum pointing down. So yeah, you can get bounces off of a crazy CPI in the morning, but if there were none, does that look bullish to you temporarily? No. In the Dow, you hit your downside target Friday. See it? That's where you hit it. So between that number and the 100-day average is where I'm looking for support. You got oversold in the process. You can see that right through here. And that's where I think the pros stepped away from the market. Now, they might step back in, but if they're stepping back in, I don't see anything bullish to step on. I see that the market might even get sold at 35,022 from the pros, and they'd probably want to back away from this if they got over 35,076. That's how I'd be viewing it. In the Russell, you fell all the way down from this good rally into the 100-day average in green. The red is the 18, and the market's got itself a problem. Lower highs, lower lows. Even if you had a rally here over 2266, you'd have a lower low, higher high, not an uptrend. So this is the zone the pros are hitting the market. Will they go through the CPI report? I don't know, but I don't see anything bullish on the chart. In the VIX, the market got up 2 days in a row to the 200-day average, and it's having a problem there. The pullbacks have found support at the 18-day average. The trend is up. Higher lows, higher highs. Now, to break the uptrend, you've got to take out 1699. That would do it. But if you don't do that and you keep going up, I would still look for the pros to go short calls at the 2165 level, looking for an eventual move back to the 18 level. We'll see if I'm right or wrong tomorrow. That could all happen due to the CPI report, one way or the other. 30-year note, what can I tell you? Lower highs, higher lows, and stuck against the 18-day average. It's looking for a reason to make a move. When we look at the 10-year note, lower highs, higher lows, stuck against that 18-day average. It's not running away from it the way it did here. It's stuck at it right now. And when that happens, you churn your own money because you're looking for a breakout, and it generally doesn't come. In the dollar index, you tell me where you see the resistance. I see it crystal clear at the 18-day average. Settle over that number, and I can get friendly the market. But it keeps coming to it and failing to do that and then getting thrown back. So I'm guessing that if you can clear 92.85 area, you might get a clear sale up to the 93.50 area. We'll see what just happens on that. Momentum up, trend up, but the bias down temporarily. In the eurocurrency, we've had that correction from when you lost. Here you come up. And if we take a look here, here's the market. Both numbers are not over 80. Both over 80, both over 80, and the very next day, both over 80. What happens when you lose an embedded reading? You often make a run back to the 18-day average. Now, there's more rules than that, and that's why I have the course on it, but that's what I'm looking for. And this is what the market's actually done. So I'm fairly satisfied with how it's acted. I'm looking at the British pound, and it's got a pattern of lower highs, overbought, upside bias. Let somebody else own that one. In Bitcoin, remember, this is the September. It's going to go off the board shortly. And notice that everything I'm showing you now is December. Stock indices, the currencies, interest rate futures. You've got to make, well, you don't have to. You can do whatever you want, but I've made the move. Lower highs, lower lows. Where do you keep finding support? Right where you should. The lower Bollinger Band, where I think the pros came out of shorts now. You're oversold in a downtrend, and that's the logical spot for the support. Now we're starting to get a pullback in the November versus the WTI crude. It's gone from the 350s all the way back to 328. If you look at the trends, you're still embedded. That is bullish. So the Brent, to me, is still in the bull play. And until the red line closes under 80, I think the pros are looking to see, can they drive it into the 75, 80s or so. WTI crude, did it embed or not? Let's step back a little bit here. Both numbers are embedded. They lose it, and they gain it back the next day. Until it loses it again, target, still the upper Bollinger Band. You can only get the embedded reading back the day after you lose it. It's another day after that, forget it. October heating. Look at how the market's hanging in here. Why? Because everybody's concerned what's going on with the refineries, how bad did they get hit from Ira, what's this next storm going to do? After we get that out of the way and either get an all clear or there's more damage, we'll have an idea of where we're at. And the same thing goes for the nat gas, which has been on a tear to the upside. And nat gas is priced so low in America. I know you don't believe that here. Compared to Europe and other places, it still pays to liquefy it and send it on. I know that's nuts to a lot of people, but there's still plenty of money in it. I was reading a report on that just today. And you know, that's where we come in. We get information all day in our company. It comes through our charting services. Many of us subscribe to other services. My brokers have 20 years experience doing what they do. Yeah, all of us have at least that. I've obviously got 5 decades. And the idea there is you can discuss your trade ideas with them and talk to somebody that's got mileage on them. That's their job. Their job is to work with you, see how much you need from them. They can set a commission adjusted to that. There's no such thing today. You call a broker, oh, I want the broker's going to say, I want an $80 commission. That doesn't exist. I want you to give me all your time and I want you to charge me $1. That's not going to exist. So they'll find an area that works in there to give you what you need and what they think is fair. At any point, you can quit that, move on to self-directed trade, whatever you want. But most people find that just getting a cheap commission, a road to disaster. You got to be right the market. At the end of the day, the commissions take care of themselves unless they're exorbitant. If they're not exorbitant, just think of the logic. You got to be right the market. If you need more help, just call my staff, 866-973-2077. You can go to our website. You'll see our free offerings on the bottom right and look up things about our company. This is what we do. We're futures brokers. You have a great day. I'll talk to you tomorrow.